Welcome to this lecture example on interest. This lecture example is designed to illustrate a couple of principles for you. First up, it will ask you to indicate what the source is of some interest that was received. Then it will tell you what to do if this person is a resident, the person has received it. Then if the person is a non-resident, but with a person that has not been physically present in South Africa. And then again with a non-resident, but where I provide you with days physically present in South Africa during the 12 months preceding the payment date. So this is to illustrate exactly how interest for residents and non-residents work, and we're going to focus on the non-residents. The residents you basically already know. Okay, so Mrs. F received the following interest payments during the year of assessment. So then they ask you, first question, for each of these interest payments, indicate if it's from a South African source. So guys, if we talk about a South African source, remember, interest is from an SA source if paid by SA resident or funds used in SA. And this is obviously section 9 2b that tells us that. Right, so let's look at it. 1st of March, 25,000 rands was received in interest. The amount was received in respect of South African government bonds. So that is a South African source, South African government. So South African government is a resident. The amount was received from a South African bank account. That's a resident. The amount was received in respect of a listed debt in South Africa. That's a resident. The amount was received from Mr. H. Mrs. F had lent Mr. H money, and this was the interest he had to pay per the agreement. Mr. H is a South African resident. Right, so South African source. 18 November. The amount was received from Exco, which is a foreign company. Right, so that's not a resident, who had borrowed the money from Mrs. F. Exco used the money in the foreign country. Right, so it was not paid by a resident and not used in South Africa, so this is not a South African source. 17 December, the amount was received from Mr. D. Mrs. F had lent Mr. D money, and this was the interest he had to pay per the agreement. Mr. D is a resident of Australia, okay, so not a resident. He used the money borrowed from Mrs. F to purchase the assets in South Africa. So he used the money in South Africa, South African source. 23 February, the amount was received from a collective investment scheme as an annuity. Mrs. F received the same amount each year. The collective investment scheme is in South Africa, so that is South African source. Right, then B. Assume that Mrs. F is a resident. Calculate the taxable income and any withholding taxes that are applicable, and you may assume that Mrs. F is 40 years old. Now guys, let's just quickly talk about, I'm not going to do this one in detail. Couple of things that you need to know. When she's a resident, there is no withholding taxes payable. Right? That's why it says no withholding taxes payable. That's the first thing. The second thing, as a resident, you are taxed on your worldwide income. So all of these interest amounts will be included in gross income. Right, and what do you get for interest? You get an interest exemption. She's younger than 65, so 23,800. Right, you only get it once, so all of these others are just to show you that it's already been used. Then just quickly, guys, just remember, this is a comment here, the 17th of the 18th of November, this one which is not from a South African source, there is no exemption available for that. It's foreign interest. Okay, so that's very simple. Now let's look at C. So now we assume that she's a non-resident and she has not been physically present in South Africa during the last few years. Okay, so I'm going to remind you, these are the steps that we have to follow when a person receives interest. If it's a non-resident, you ask, is it from a South African source? That's what we did in part A. Then you add the amount, if it's from a South African source, to gross income. You consider whether section 10(1)(h) exemption is applicable. If it's not exempt, then apply section 10(1)(i), and then do the withholding taxes. You'll see I'm going to do it like this, but a little bit more of a combination. I just want to remind you also here, section 10(1)(h) says interest received by a non-resident is exempt unless physically present more than 183 days in preceding 12 months or permanent establishment in South Africa. Okay, so let's go and take a look at this. Okay, so what I recommend that you do, this is your script, the first page, always the one on the left because it doesn't take as much space. Right, then we've got normal tax. The headings are description, calculation / explanation, and rands, same on this side. Okay, so now to remind you, this person is now a non-resident. So this is what we do. Everything, and she was not in South Africa. So what I recommend that we do, guys, is we will do it as follows. I'm going to do each transaction at a time. So the first thing we do is that 25,000 rands from South African government bonds. That is from a South African source, so it must go into gross income. Right, what is that date there? 1 March. So 1 March, that's the interest. 25,000 rands. Now, Section 10(1)(h). Is it applicable? So what did Section 10(1)(h) says? It says it's always exempt unless the person was in South Africa more than 183 days in the last 12 months or there's a permanent establishment being carried on. Now in this case the person was not in South Africa and there's no permanent establishment going on, so we know immediately that is exempt. Then let's look at the withholding tax. 1 March. Right, that interest. Will there be withholding tax? Who paid this? It was paid by the South African government. Remember, if the South African government, South African bank account, or a listed debt, they are all exempt from withholding tax. So paid by SA government, that's exempt. Section 50D. So there we go. That's the first one done. Our next one is the 15th of April. It's from a South African bank account. So it's from a South African source, 30,000 rands. So 15 April, 30,000 rands. Does Section 10(1)(h) apply? Yes, because it's a non-resident receiving South African interest and none of those others are applicable. Right, nice. Then, under the withholding tax side, 15 April, this was again paid by a South African bank account. So it's paid by a South African bank, thus it's exempt, also per Section 50D. Right, then the amount was received in respect of a listed debt in South Africa, so it's a South African source, 35,000 rands. So 20 May, 35,000 rands. Section 10(1)(h) must apply because it's not, person wasn't in South Africa 183 days, no permanent establishment. Can you see, guys, how simple it is so far? Keep it all open, and this is listed debt, thus exempt. There we go. Right, then 31 August, South African source, so 40,000 rands. Wasn't in South Africa more than 183 days, no permanent establishment, so section 10(1)(h) applies. Then, under the withholding taxes, there must be withholding tax. It's not paid by a bank, the government, or a listed debt. So, we have withholding tax. 17 December, 50,000 rand, 18 November, not a South African source. We are looking at a non-resident. So the 18th of November, it's not a South African source. So there's nothing for us under normal tax, and under our withholding tax, not a South African source. So nothing. 17 December is from a South African source, 50,000 rands. Section 10(1)(h) is available. Person was not in South Africa more than 183 days. No permanent establishment. Right, there must be withholding tax. There's no exemption in this case. And then 23 February, it's from a collective investment scheme. Right, and it's paid as an annuity. Okay, tricky there, guys. Paid as an annuity. So 23 February, 55,000 rands. Section 10(1)(h), not available as paid as an annuity. Not very common to see this. I wanted to just put it in for full example. That's section 10(2). Right, if that's not available, then you get your normal interest exemption under section 10(1)(i). This person is younger than 65, so it is limited to 23,800. Right, then under our withholding tax, guys, there's no rule about annuities there, so 55,000 times 15%. There we go. Okay, that's it for C. Now in D, all that we do here is we make it a little bit more complicated by giving you months that this person, or days that this person was in the preceding 12 months. Okay, so withholding and normal tax. So a lot of it is the same situation, guys. Okay, so let's start with it. So again, 1st of March, received from the South African government. $25,000. Okay, so we include it. We're still a non-resident, 25,000. Then we have to consider, let me actually just start here, section 10(1)(h). So remember, section 10(1)(h) is available unless the person is in South Africa more than 183 days, permanent establishment, or an annuity. In this case, the person was in South Africa for 185 days. Can you see? More than 183. So this is not available as in South Africa more than 183 days. So we don't get it. If you don't get that, then you get your section 10(1)(i) interest exemption. Person is younger than 65, so this is limited to 23,800 rands. Okay, and I just want you to see you've now used this up. It's been fully used. Okay, then we go to our withholding tax side, 1st of March. What do we know here? This was paid by South African government. Right, so it's exempt. Next one, 15 April, 30,000 received from a South African bank account. Right, 30,000. Section 10(1)(h) is the first one we have to consider. This person was in South Africa for 180 days. So less than 183, there's no permanent establishment. It's not an annuity, so section 10(1)(h) is available. Can you see? There we go. It's a normal rule. Right, let's go to our withholding tax on the 15th of April. This was paid by a bank account in South Africa, so it's exempt. May, 35,000 for the listed debt. Right, can we apply section 10(1)(h)? And guys, this logic I'm following is an exam which you should also do. So 20 May, so we look at 20 May, we go back 12 months, 187 days in the last 12 months. So this is not available as in South Africa more than 183 days. So it's not available. Right, then we go and look at our withholding tax. In this case, the withholding tax is a listed debt. So it's not there. Okay, so guys, again, is this from a South African source? Added the gross income, apply section 10(1)(h). If it's not available, apply section 10(1)(i), and then do the withholding taxes. Okay, so now we've got 31 August. 40,000 from a South African source. August. 40,000, section 10(1)(h). 31 August, the last 12 months, 185 days. Right, so we don't get it, and again, section 10(1)(i) has been fully used. Okay, otherwise, because that's the next step that you would consider here. Right, that's 31 August. Go to our withholding tax. 31 August. Now, what does it say for withholding taxes? It says there must be withholding tax unless the person was in South Africa for more than 183 days in the preceding 12 months. Or if the person has a permanent business establishment. So this is section 50D3 that tells us that. So there's not applicable as person in SA more than 183 days. So we don't have withholding tax. You see, you just need to keep them ahead with you. But it's the same rules all the time. 18 November, this is not from a South African source. So that story still applies. 18 November, not South African source. Right, then we've got 17 December from a South African source, 50,000. We consider section 10(1)(h). So let's go and see. 17 December, 180 days, nice. So section 10(1)(h) is fully available. Right, then we go to our withholding tax, section 17 December. This is 50,000 rands. There must be withholding tax unless the person was in South Africa more than 183 days or a permanent establishment, or it's paid by bank, government, or is a debt. None of those is applicable. So 50,000 times 15%. And on 23 February, 55,000 rands. This is the amount paid as an annuity, just reminding you. So section 10(1)(h), already you can just say not available as paid in annuity. That's per section 10(2). And also just, if you go and see, it would in any case not have been available because the person's in South Africa for more than 185 days. So it's not available. Section 10(1)(i) you would use, but it's been fully used again. I remind you there at the top, been fully used. Right, so that 55,000 rands, 23 February over here. Are we going to calculate withholding tax? No, because the person's in Africa more than 183 days. So not applicable as in South Africa, more than 183 days. Alright guys, and that's it. That is basically how this works, and it should not be really more complicated than this.